So, yeah, what's up, guys? Today is the 22nd of March 2026, and again, it's been quite some time since I held a weekly technical analysis. So, I'll be taking you through this weekly technical analysis of the 23rd till the 27th of March, and there is much craziness that is happening in these charts, and I would like to explain much about it. It's been quite some time since I last held a weekly technical analysis. Have been through up and down. The market has been quite sluggish. Okay, some it's been moving quite well, but again, we have been caught up in some turmoil already. I've lost like one funded account. I've won one and I'm still continuing with another one. Again, it's still the flow with all this war and some craziness that is happening. We can still capitalize on this and don't get caught up. I would just like you to listen with whatever I'm gonna explain to you about the charts. And many of you are just talking about charts, the technical analysis and everything. This is where now the geopolitics comes in and the fundamental analysis comes in these charts and every other thing that is probably the sentiments that are happening in this from this Iran war and whatever that is happening in the dollar. So it's much crazy that this week and again the next few months that are coming on, the next few weeks that are coming, we are anticipating to see much craziness. Many people are anticipating because we have a war. We are just anticipating to buy gold, 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 because that has been the gameplay that has been there each and every single time. But now you're playing around with a country that doesn't care. This is Iran, which has been affecting the oil prices and all these the monetary policies. Many people they're just and the US yields are going up. Things are crazy. If you don't understand most of all these sentiments and again the fundamentals, you're gonna go mess up or fuck up in these markets because again you're just following the structures. Many of you, I know many who call me telling me, oh, why is gold not buying? Why is gold not buying? I didn't care, but I was understanding that the dollar was at some point I was in the structures that the dollar is likely to be heavily bullish, despite many of you saying that people will dump the dollar and again in focus on the most of all these other like gold and which are safe havens. But again, that's not happening. The reason why this is not happening, probably you can explain it down on this breakdown of the sub fundamental that will be coming up and get started by without talking too much. Let's just get started by having a look at the fundamental analysis or again the economic calendar and we see what is likely to be happening this week and which are those days that we can capitalize on the charts or again which are those days that we can capitalize on these opportunities of these high impact news. So again on Monday, tomorrow being the 23rd of March 2026, and we do have medium impact news that will be coming up on the New Zealand dollar and again the euro, the USD, and again the euro still. So nothing much is likely to be happening. I don't like trading much on Monday. But again, we may expect to see the market retracing back. But again, on Tuesday, we are coming in heavy and we have medium impact news still on the euro, medium impact news still on the pound, and again, high impact news on the dollar. And I'm looking forward to see the dollar heavily bullish because the US yields are very, very high and all these monetary policies that are happening. I know most of you have just been expecting some rate cuts, rate cuts, rate cuts, but that hasn't been happening. The market is quite, all this is hawkish, and that tells us that what's likely to be happening? The dollar is likely to be heavily bullish. And when you get to Wednesday, if you look at it, we have very medium impactance on the dollar, and again, very, very high impactance on the Australian dollar. And this is a great time for us to capitalize on because, again, I'm heavily focusing on. You can see we have high impactance that are coming up, focusing on the CPI and again the inflation rate. I'm looking forward to see the Australian dollar heavily bearish despite it. The reason why I'm saying the Australian dollar, I'm looking forward to see it heavily bearish. It's because the dollar is heavily bullish. And at that point, as you know, most of all these other major pairs move direct opposite of each other. And am I sharing this chart? Am I sharing? Am I sharing? Am I sharing? I hope I'm sharing. Oh no, yeah, yeah, yeah. Okay. Much of all this that happens is when the dollar is heavily bullish, as you know, most of all the other major pairs are heavily bearish. And Wednesday is quite a crucial, crucial day for us to that you can capitalize on it, or again, you can trade and win up on some trades. And I'll explain to you once we get down to the technical analysis. And again, on Thursday, we do have very high impactness on the euro, and again Very high impact news on the dollar, still on, so that is the USD, that is on Thursday, and again medium impact is on the euro. And I'm looking forward to see most of all these, like the euro out, euro New Zealand. I'm looking forward to see the heavily bullish. And when you get down to Friday, as you can see, we have very high impact news on the medium impactness on the USD, and again very high impactness on the pound. All these I'm looking forward to see them tank heavily bearish like the pound. And again, when you look at the USD. Still on Friday, we have still a very high impactness on the dollar. So this week, I'm looking forward to see the dollar continue heavily bullish, and I don't know at which point will the dollar stop moving, or again continue being that heavy bullish in that heavy bullish move. So let's get down to the technical analysis. I want to be quick first in all these. I hope I can spend less than even 20 minutes in all these. I know I'll speak quick, fast, and again, I'm just doing it based on the technical analysis. If you want based on the fundamentals, probably you just follow up. But again, you need to go deep and ask. Probably you just need to go deep into it. Don't get messed up that you're only following up the fundamentals. In the market, we always do have technicals, and again the fundamentals, and again the sentiments. And when all the sentiments come, because again the sentiment is something that is coming up all of a sudden. We didn't expect it, but it just came in and kept in, and all these changes the market structures. So most of all, many guys are just talking about that market structure has changed, blah blah blah, but you don't know why all this is happening. It's just due to the fact that we have all these geopolitics, and again we have all these monetary policies that can't coming in. Most of all these central banks. Major central banks, they are having they're expecting the inflation to be high, and again they expect it coming down, but again that is not happening. That's not happening at any single point. So let's get down now to all these other pairs, and as usual, let's get down started by having a look at the dollar. And I'll get started by having a look at the dollar from the monthly time frame. And this is the previous month. We have this the February monthly high, and again monthly support. And when we look at it on the weekly structure, weekly time frame. As you can see, we have been trading in between these weekly lower high, weekly lower low, lower high, lower low, lower high. This area was taken out, these equal lows that are taken out, and again, we created a new lower low here. From this current area, I was expecting to see the major current area being taken out, or again, just try to liquidate itself and again create new lower lows. But again, that hasn't been happening. We have slightly tried breaking above this current area. That was on the previous week. And again, last week, the market just came, retested this 78.6. As you can see, this is the my 0%, and again 100%, and again this is my 0%. I was expecting the market to retrace from the 61.8 or again the 78.6, but that didn't happen. So with all these current areas, these current levels that have been taken out, at this current point, when I look at it on the substructures of the daily time frame, you can see here we had a major point of imbalance in between this current area. We had a higher low, higher high, higher low, higher high. Here the market has come and liquidated itself, formed a major weekly support, and again the weekly higher high, the weekly high. And all that I can see here, this is the Friday low, the Friday high. The market is showing some momentum of creating some major higher low even on the substructures of the 4-hour time frame. So what am I looking at here? When I look at this chart in this manner, I can see this market is trying to create some descending channel. And whenever I see a descending channel, then the next move is always a heavy bullish momentum move. And from this current area, I can see some structures that is trying to be created. And these all that I'll be patiently waiting to see these structures being taken out. And anything that could happen probably is the market just trying to come here. That is on Monday. Again, just try to slightly pull back and then again give us momentum to see this market heavily bullish. Because again, once we have the extension levels that are coming all the way to the 101.7 or again the 102.7, that is also coming in to the 127.2 Fibonacci level. And at this current area, you can see where is it retesting? It's testing the previous and another weekly lower high. That was back in May 2025. And once this structure is broken, all that I could be looking at, as you can see, we have been following up this structure. These are 50% Fibonacci, 61.8 Fibonacci, and all the way that is happening, the market has been breaking this current area of these structures, these major levels. And I'd like to extend this. Let me show you something. The reason why I had these levels, if you remember, for those who have been following up, we have these are 50%, 61.8%, and again, this is the 78.6%. This is 78.6%. So at this current area, this current level, we have these in this manner. There you go. That's the 70.6 level, Fibonacci level. There you go. So all that I can see, but all that I'm patiently waiting is to see this market break this structure. This weekly low high that are in between this current level, break below, break above that those current levels, and again come all the way to this price of 101.6, and again the 102.5, or even above that, and even can touch the 105. So this is quite crazy. I'm patiently waiting for these structures to be followed up, and just be keen, move with the market structure, or again follow up with whatever is happening. Forget about much of the technicals. Again, still the technicals will show themselves, but again you need to also come in with the fundamentals that are coming in, and again the sentimental analysis that are coming in each and every single day. You never know when the world stop, and again we don't even care. We okay, but let me say we need to care about it because it's changing. Everything has been followed up by many people that when the inflation comes in, the Fed needs to increase interest rate for it to lower it. But all this, that is not happening. That is not happening. So when the never sentimental analysis comes in, it kills everything else and changes much of it, not unless you're very strict with your technicals. So again, when you look at different structure, or again a different time frame on the dollar, or different chart on the dollar, you can see wherever you're trading at, we're trading in between this descending channel on the weekly time frame. And again, this current area, we had a huge major point of imbalance here, and this is a major level, the 60% for me. And all that I'm watching is I'm just in the market creating higher low, higher high, higher low. When I look at it on the substructures at this current point, we had this current area as the daily major level. This is a major point daily imbalance level, and all that I can see here now, I'm patiently waiting to see how the market will react on Monday, because I'm not looking forward to seeing Monday. Probably I'm not looking forward to see the Monday close below the Friday low. So I'm hoping to see if it can retest. Sorry, if it can retest, and again try break above this Friday high, and again break above that current area, because again we have this structure trying to follow up these major levels. Can break above this lower. You can see all this that is happening here. Higher low, higher high, higher low, higher high, higher low, higher high. Looking forward to see this current area held, been holding it well as a higher low, and again break and come all the way to these higher high levels, or again this major point of structure, break above this current area, and we could break out from this range that is currently here. You can see also on this structure we have been ranging in between this current area. If you look at it on the weekly time frame, we have been ranging in between these current levels. It's heavily ranging. It has been heavily ranging. And so we need to see it break above this current range and probably come take out all these lower high levels. Lastly, on a different chart, you can see we have this the monthly support, monthly resistance, monthly support, supporting well on that structure. And now it looks heavily that we need to come with these prices may even retest this price of 105. 105 must be crazy. I can see a huge major level of imbalance here. Wow. Wow, that's based on the weekly structure. So a break above the 100 price level, it shows us we have a heavy momentum of seeing this market coming all the way up here. And I'll probably high chances is that I'll leave I'll even trade on a small account and leave it and forget about it. Because again, I'll be patiently waiting to see how the market will obey this structure from this current area. This is the lower high, and this is the lower low. I'll patiently wait to see, is this structure, where is it trading at? If you look at it, it is trading at the 61.8 Fibonacci level. That's the price of 105. And that's interesting. You can see exactly touching the price of 104.20. That tells me much. I can even uh, follow up on this. I'll be keenly watching or monitoring on this heavily, and I'll not change my decision on this till the war probably stops or anything else changes. I'll just be patient with this for probably several weeks. This could change on May or again June, the first half of the year. So I'll just follow up the structure, because again, the structure and again the sentimental analysis, the same math, and they are aligning, everything is just aligning itself. So I'll just patiently wait to see. You can see we have this was a major low high that was broken, retested, and again, when you look at it on the daily trade frame, the daily candlestick, how it closed for this current area, and now I'm patiently waiting on Monday to see how the market will close on Monday. Then again, looking forward to see it gain momentum, and once it gains momentum from that current area, then we could be looking forward to see the continuation of these heavy bullish moves. So, yep, that's good, and that's all I'm patiently waiting to see. So, Anyway, let's get started by having a look at different charts or different pairs. Again, now this is the Australian dollar, AUD. And for AUD now, so this is AUD, and this is the previous monthly resistance, monthly support here. We do have monthly support here, and this was my 61.8. It came all the way from 61.8, then the market has just stopped there. I was expecting to see it come all the way to 78.6, but that didn't happen. So anyway, either way, whenever I see the market touching my 61.8, I always let it come to 23.6%. 23.6%. Okay, 0.236. So we have chances that this market come all the way to the, hey, god damn it. This market come to the 0.64 price level. That's interesting if the market come all the way down there. But anyway, that's based on the monthly time frame. When I look at it on the lower time frame, this is the structure still. When I look at it from the structure, this is the high, this is the low. I can see this is my 78.6. And again, we were looking forward to see this market come all the way to this current area, 0.64. Well and good, it comes all the way down there, but all that I can see, patiently wait. Also fast, I would like to see it come to the 0.66. Then from there, if it breaks below, well and good, I'll wait for it to come to the 0.64. But now, where is it trading at currently? Now, this is the 61.8, 50% Fibonacci low. That's why I've just drawn those structures there. And all that I can see here now, it's a game plan that I need to play out with it. I just need to understand the flow, and that's all. That's all. I believe now I'll be able to kill several challenges. There you go. So that's the weekly resistance, weekly support. All I can see is that buyers haven't been liquidated. All buyers haven't been taken out. So I just need to get an area or a position or an entry for my continuation of this sell that is trying to creep in here. You can see here the market has been stagnating, just higher low, higher high, higher low, higher high. No new higher lows are being created. Here the market started creating lower low, lower high. I need to see the market create new lower lows. And I'm now looking for a point of interest that I can jump on this trade, or a good structure that I can be able to execute this trade. And when I look at this chart now, this current area that we are at now, we have this chart from this current 78.6, came all the way to the 23.6%, liquidated itself from there, got some rejection from that current level, and you can see some slight rejection here. And all that I can see here, the market is trying to reject. Could it come now to this current area? All that I can be patiently waiting to see, will it come to this 38.2? Then again, get rejected heavily. And again, we can try capture some new entries to see this market if it will first sell off all the way to this current area or this current level. This is a huge major point of imbalance that I can see here. So let's first get rid of this. So when I look at it also in this current area, the area that I'm talking about, you look at it also on the substructures or the 1 hour time frame. Oh, wow, I've just seen something here. This is what I wanted to see. This is what I was looking for. In between this current area, that's where I'll be watching to see if this market could give us an entry in this current level. Yep. That's a good area that we can see. We can patiently wait to see if this market will come all the way. There you go. If this market comes all the way down to that current area, that would be a good level for us to get an entry. Then again, once we get an entry from that current level, and I'll be tweaking this trade all the way till down. You can see it will also be trading in between 61.50%, and I'll be executing this trade, coming all the way, looking forward to see it break below this month weekly support, come all the way to this current area, and that's closer to how many pips? That's closer to 80 pips, and again 90 pips. So for this trade, that's a good move that I'm patiently waiting. So this is a short position that we are anticipating to see it play out. Yep. I'm looking forward to see this trade play out all the way down there. And I can risk this trade with my stop loss slightly there at the 78.6 Fibonacci level. So in this trade, I can risk 40, 50 pips, but again, what am I focusing on? 90 pips. So 90 pips is it's a good risk ratio as long as the market once it starts playing out, you can just push your stop loss to break even, and again you can move up with the flow. So that's all on that USD, and I'll be patiently waiting to see how the market plays out. If the market gets back to this current area, then I'm executing this trade, and I can see also my moving average is trading in between that current area. That's my moving average 60, and that's a good place for my execution. That's all that I'm watching. So next pair of discussion is New Zealand USD. New Zealand USD moves same direction with AUD USD. And when I look at it on the higher time frame, it's still obeying my structures. The crazy thing is still obeying these structures. So at this current point, previously I had talked about this market coming all the way to this 17.6. You can see huge rejection. And once it touches the 38.2, I was expecting it to pull back. But again, I'm waiting for it to break and even come below the 23.0.236%. And for this, we have not created some new weekly lower low. There you go. New weekly lower low. There you go. It's kind of slow, but again, you can still execute. These are weekly support. I don't need to keep on drawing again and again. When I look at it on the daily time frame, we have a good execution here. Then, well and good. This is a good good play for us to execute. Because now for this, what I'm watching or what are the it's coming or internalizing in my mind is that this market will. I'm looking forward to see it continue resisting from that current area, and again, it will come all the way till this current level. How many pips are those? It's closely to 190 or 200 pips all the way down there. And when I look at it also, let's get back also to AUD. And I look at AUD, before we get back to, before even we just calculate these few pips here, if you need also to catch it up on that long trade or long execution, my first take profits should also be here, should also be this current area. So let me first get rid of these. Should be all this current area, monthly support, a break below that monthly, this weekly support, then we'll be expecting to see this trade come all the way to the monthly support. That is closely to how many number of pips from the current area that we are expecting? That is closely to 140 or 150 pips. Similarly, New Zealand USD, and with that again, you have been able to understand the structure of what is happening and what is going to be happening in some of all these trades. And again, let me show you something that is happening here. We have this ascending channel. Whenever I see an ascending channel, then next move is always a heavy bearish move. Whenever I see an ascending channel, the next move is always a heavy bearish move. So that's all again for the New Zealand USD. And again, the next part of discussion is euro out. Man, for euro out again, for this structure now, if you've been following me up, year out made me send money in 2022. And I believe it's still the same script repeating itself. And there is high chances that this could be possibly a good trade for us to run with it. And again, you can capitalize on it depending on how you're trading. And it's up to you. It's up to you depending on how you want to trade this. So all that I can say here now, based on the weekly time frame, let's first get rid of this. This market structure has been, this is the monthly support, monthly resistance here. We have this as the 0%, again at the 1.6, and again this is 0%, and again this is 100%. I can see two good rejections here. A major low that was created, and again this is 17.6. Whenever I see the market touch the 17.6, I always let the market breathe all the way to that 8.2. But first, I'll let the market come all the way to this strong point 8. From the strong point 8, from the current level where it is at, I'll be patiently waiting to see if this market could give us 500 pips. Will it give me 500 pips? I'm not really sure. But with this candlestick, and again, this turnaround that has happened here, and with whatever is happening to the AUD, high chances, I mean, most likely that could happen. So let me just follow up on again on the AUD, and let's see. On the euro out or this structure, or again, what is happening here? This is a game plan that is highly it has high probability of what is going to be happening. I can see this is a major high, this is a major low, lower high that was created, that had been created there, and this current level, that current area, low high, lower low, lower high, lower low, all these that I'm seeing happen here, and I can take this current area. I've seen this market had tried breaking above this current level, so I'm patiently waiting to see. In this current area, this is the substructure. Sorry, this is the inner trend line, and again, this is the outer trend line. So it depends or whether you trade trend lines or not, it's up to you. So, but just forget about that. So whenever when I look at this the structure of these are weekly resistance, these are weekly support, and again the market is trading below the monthly support. And remember, it's 100 pips below it's 100 pips below. What's this calling me now? Oh no, who's calling me now? Is this Dunham Manas calling me, disturbing me? Oh no. So at this current point or this current area, oh, someone's mine. Anyways, my girlfriend just called me. So anyway, at this current point or this current area, whatever the market is trading at, we're trading at the 17.6 Fibonacci level, and I'm looking forward to see it come. Will it come all the way to this current level? Because again, when I look at this structure, is this as the high and these are the low, and again, 17.6 currently here. That's a good level. High chances the market could flow all the way up there, but I would like to see it break above this structure. These are the equal highs, and these are my first take profit levels. My first take profit levels will be here, and again, the next take profit levels would be at this current area. So when I look at this chart, we have chances of, I'm looking for an entry where I can jump on this trade and again push on, run again with it and capitalize on it. So we have created higher high, higher low, higher high, higher low. And where can I get an entry for execution? Am I likely to get a good entry for execution? We have it there. I'm looking forward to see this market come in between this current area. Let me see on the 1 hour time frame. Where could we get some good entry for execution? High chances is this market could, if this market could give us a chance, try come retest below this current area, retest here. That would be a good entry for me to jump on this trade, swing with it all the way to this current area, above this current highs, and again to this current level that I've talked about. So that's the Euro New Zealand, and again we have now Euro New Zealand. Sorry, that's Euro out, and again Euro New Zealand moves in direction with Euro out. And so for these now, also for the structure, you can see it has been stagnating here. It has been supporting well here, held in well. And again, as I said earlier, whenever I see my chart touching the 61.8, rejecting it, I'll let the market breathe all the way to this current level. So this is the weekly structure. Again, you can see the last week it closed heavily bullish, and again, last week button also closed heavily bullish. And so for this now, I was expecting to see it try continue breaking below, or again most bearish, but now this is happening. Now, this current area or this current chart, when I look at it on the lower time frame or the daily substructures, I can see this market is supporting heavily well, and I'm looking forward to see this market. Could it come to this area? We have a good level of imbalance here, and it's also coinciding with a major level of interest that we want to see this market come to. So will the market come all the way up there? Well and good. If it touches that area, so that will be a good move. Because again, how many number of pips are we trading? We'll be trading close to 500 pips, and it's also equals to whatever we have seen also in the euro out. I don't need to keep on discussing much about this. I just following up the structure. I'll be patiently waiting to see this market area being broken. This this area, this current level, again, it will break. Looking forward to see it break, and again probably slightly pull back, retest, and again from there we could gain momentum and all the way flow with it to this current area. So next pair of discussion is gold. Now most of all those guys who are trading and selling, keep on buying gold, keep on buying gold, continue. You can continue buying gold because you always know, and everyone has been preaching, whenever there is war you can only continue buying gold. So as I said, follow the sentiments and everything that is happening. Again, if you don't understand all these, most of all this that is happening, geopolitics, and again, most based on the monetary policies, all that is now useless. All that is now useless. You just follow up the structure that you just be keeping on saying, why is gold dropping? Like last week, how many number of pips if you calculate how many number of these? These are 5,000 pips. 5,000 pips, and not many people who blew their accounts. Many people who blew their accounts because they were just trying to catch up on each and every single point. You can see I didn't have any entry here at this current point. And it's not that I'm perfect in this. As I've said, I've lost several challenges, but again, I didn't want to play with the majority at some point at this current area or this current level. I know I'll be able to recover most of all these then the accounts that I've lost. I don't mind. I don't care much. But again, I can see these levels. Next pair, if I just follow up on the structures and how the market is flowing, we have chances of seeing this gold breaking all the way to this current area, 4,200. And what I may excel, what else do you expect me to explain about gold? I'm not trading it much. At all that you can be patiently waiting is just wait to see if this gold will give you an entry. Because again, most of all these traders will jump on continuation of sales. But again, remember, tomorrow is a Monday, and the market will just not necessarily continue heavily bearish. So wait for it to pull back to this current area. You can see this is a previous level. Monday, the market doesn't move heavily. So just be patient. Be patient. No, take your time. Take your time. Wait for the market to relax. Take your time and wait for the market to pull back. And again, you can execute your trades on a better lower high level. Because again, you can see these are equal highs, and these equal highs need to be liquidated. Equal lower highs, they need to be liquidated. And whenever they'll be liquidated, wow, it'll be a crazy, crazy move that will be seeing the market melt down well. So either way, I'm not trading gold, but if it comes all the way to this kind of level, 2000, 2,500 pips, well and good. That's a good move, because that will be a good area that you can capitalize on catching up on the next move. You can see also my the power. And I don't know why all this just aligning with everything I'm talking about. I can see just it high chances the market will come back here. Then again, you can execute your trades and let it flow and move around with it. So next part is going to talk about is Euro GBP. Euro GBP looks heavily bullish again. As I've said, seeing the pound, I'm looking forward to see heavy bearish. This market caught up a good level, and this current level, I believe it's a 61. It was a 61.8 previously. Current area, it was a 61.8. You can see that 61.8 has held well, very well. Well. It was held well there. And now these the weekly support, weekly resistance. And again, for this, I'll wait for the trade come all the way to the 23.6, probably the previous monthly resistance. So when I look at it on the weekly time frame, which is the weekly support, which is the weekly resistance, I can see this current trade. We have some slide sellers who are trying to come in there, and I'll be patiently waiting to see how the market will react tomorrow, or again Monday or Tuesday, slightly pull back, then again gain momentum, probably later on Tuesday, Wednesday. This slight pullback will give us some good entries to see this market continue heavily bullish. So that's all on this chart. I would like to talk much, because again, I can just follow up also when I follow up also on the structures on this current area. You can play around with this trade and wait for it to come to the 78.6. Here we have a huge major point of imbalance. How many pips of those? You can patiently wait for it come slightly pull up. That's close to 100 pips. So it doesn't move that much, so I don't care much about it. So that's for Euro GBP. And again, last but not least, we have Euro GBP USD. And for GBP USD, I've been patiently waiting to see this trade heavily bearish. When I was watching, or again, when I was playing around with it last week, when I was trying to do my analysis, I was patiently waiting to see this market heavily bearish. But again, that didn't happen. It tried pushing all the way up here to this pre area, retested the monthly support. And again, now at this current area, I would like to show you something here. So this chart came all the way to that current area, and this was the previous level. This was a major high, lower low. And again, the market has retested this strong point, it rejected it. And now all that I'm patiently now waiting to see is if this market come all the way down to this current level, to this 78.6. Yep, to this 78.6. Sorry. So we have created the new clear lower high there. I don't expect to see this market break above that lower high. I'll just be following up this structure, lower high, lower low, lower high, lower low, lower high. Looking forward to seeing new levels be created at this current level. And hopefully even break below, because again, the dollar has high chances of moving quick, fast, moving insane, creating insane moves. And if it could break, even come all the way, you can see this current area. If the market could break below that current area, well and good. Who are we to stop it? We are nobody to stop it. We just follow the structures. So we have this area of this moves. You can see that 8.2, and high chances is could it come and liquidate all the way down here. If it comes liquidates down there, then that would be a great move, because you can see the next level that is coming here. This is the lowest level here. Hopefully waiting to see if this market come to the 1.30. Below it, we have the 1.29, and that's close to 100 pips below the institutional level, and that would be a great move. So from that current level of the current area, if you want to jump on this trade, you can execute it and patiently wait for the slight pullback, and you have close with 400 or 500 pips. So next way of discussion, I'm waiting to see the US yields gaining heavily. I'm expecting also to see all the US stocks down, tanking each and every single day. So with the structure now, I'll just follow up on each and I'll just do this, follow it up each and every single time, and I'll start up with this current area. This is 17.6. And for this now, what I'll do here, I'll just execute this current area or this current level as this is my 61.8. I'll be patiently waiting to see this market come to the 61.8. And from that 61.8, sorry, that's 1.8. I'll be patiently waiting to see this market also come to the 50% Fibonacci level. So I have high chances of this market insane move that are like to be happening. These are moves that I can assure you, or I'm looking at them. They're 70% upright, and these are just the structures that I'm looking forward to see them play out heavily. And just be patient. Be patient. Hold the trend for 1 2 weeks. I believe they'll touch the level that I'm talking about. And what else do I have to do or talk about? Nothing else. And I believe this will be of help to you. Just trade safe. Again, don't risk. Don't keep on over risking. What's the use of you over risking? Over risking will just cost you. Will just cost you. But again, be patient. We'll play out this game. And even though you have lost, again, most of my friends are, even though you have lost challenges, we are in the same boat, but we will win and win and win again. So be patient. Again, be patient, trade safe, street small, and we have all this game plan that is coming up each and every single time. It is just a repetitive cycle. So be patient, and again, we'll win and capitalize on these structures that are coming up in the next few weeks. So it doesn't happen each and every single time, but again, I believe all that I can see, the market is not flowing. You just want to trade what you're thinking, and just many of you are trading whatever you think, because that is what I was doing. That gold is that there is war, gold must rise, must rise. But again, when you think about this, you've been in the game for quite some time. That doesn't happen each and every single time. So I'd like to stop it at that. And in case you have any question, hit me up and I'll be ready to answer. All this is for free. It's free. The moment I'll disappear, guys, I don't know. But anyway, it's crazy. It's crazy. Shit is happening. And despite losing few challenges, it's just the first quarter. We learn and we move on as long as you don't give up. But again, don't be like that. Oh, you keep on making losses, losses, and you want it to make. No, if you just focus on technicals only, this is not the year for you to focus on technicals. And I know many of are those people who are getting into Forex this year. You'll quit as soon as possible. And it's adios from me. Adios, Pompey. Bye bye. Bye bye, everyone.